Hello, my name is Michael Salmony, and I'd like to welcome you to another episode where we talk to interesting people around fintech. And today I'm very happy to talk to Peter Frey, who is one of the rare breed of lawyers specialized in payments and knows everything about PSD2 and PSD3 and FIDA and everything. So welcome, Peter. Thank you for joining me.
Hello, Michael. Thanks for having me.
Thank you. The topic we thought we would talk about is PSR and PSD3, which is going to introduce a new provision that banks are going to be liable in case of fraud, especially social media fraud. Is that right? And can you quickly explain what that's about?
Yes, Michael, that's correct. One aim of PSD3 and PSR is to strengthen the fraud prevention. And one kind of fraud which is very often seen nowadays is the so-called spoofing. What is spoofing? Spoofing is a kind of fraud via social engineering. That means a person pretends to be an employee of the payment service provider and uses the name, telephone number or email address of the payment service provider and contacts the customer of a payment service provider that is a consumer, and yes, and tricks the customer and says to the customer, you have to give me your bank details, and that leads to the fact that the consumer gives the bank details to the fraudster and fraudulently initiates a payment transaction. And yes, under the status of the PSD2, we would have an fraudulently authorized transaction here, and the bank would not be obliged to refund the amount. And that will change under PSD3. The bank will have to refund the amount because the authorization was fraudulently given. So that is an enforcement of the fraud protection in favor of the consumer.
So that is a complete reversal of the liability, if I understand it right. It used to be the consumer had to prove there was a fraud, and now the bank has the burden of proof. I mean, we've already seen this in the UK because the APP, authorized push payment fraud, is already rampant, costing billions, and the banks are now being made liable. So that initially sounds like a good idea because only the banks have a possibility of checking this. But it's going to be a bit difficult since what the banks typically then do is to provide you with lots and lots of friction and extra screens. And are you really sure you want to do this? And are you really not being forced by somebody? Do you think this will turn out well?
I'm on the fence about this because yes, the banks will try to reduce their risk to be responsible for fraudulent payment transactions, and therefore will try to strengthen their security measures. And in my opinion, that could lead to the fact that there are more screens and more security measures which are not in favor of the UX experience for the customer. So that could be the downside. But I think the European legislator wants to go down the road. We want to strengthen the consumer protection. And yes, then the consumer has to accept the loss of UX friendliness.
Yeah, I mean, consumer protection is a good thing, but I've already seen in the UK, I have a UK bank account, and every time I just want to do a normal transaction, I already get about 3 or 4, or maybe it's 5 screens, which asks me, are you sure you really want to do this? Are you sure the payee is the one you want? Are you sure and it is getting quite annoying. You actually begin to feel like a fraudster. And actually, with these APP frauds, they are getting, it's a little bit different, I understand, to what you described, if I may say so. One is they actually appear with the phone number of the bank. When you look on your mobile phone, you will see the number of the bank, although it is a fraudster. So that actually points to the fact that maybe you need to involve other industries like the telco industry to solve this problem, maybe also the social media industry to solve this problem, because that's where the fraudsters get a lot of their data from. So maybe you need to do more than just make the banks liable. You actually need to get a cross-industry approach to reduce this fraud. What would you say to that?
Yes, that's a good idea, and actually we have such proposal also in the PSD3, which says that not only the banks have to strengthen their systems, but they take also into responsibility the provider of electronic communication means. That is, if a bank detects fraud cases, they can go to the provider of electronic communication services and say to them that they have to help to prevent their electronic means from being misused for prevention. So that's already in the PSD3.
Oh, that's interesting. So these electronic service providers, or whatever you call them, that means sort of telco companies, social media companies, and all that. That sounds amazing. I mean, on this channel, I already interviewed somebody from Japan where they're already doing that. It's a complete cross-industry alliance to prevent fraud. Yes. And maybe that is indeed the way forward. But just another correction or question about what you said earlier. I think it's not always the case that the customer has to give the fraudster his two-factor credentials. The fraudster manipulates the customer into entering his credentials on his computer. So he says, you have to move your money into a safe account because we're being attacked, or because your daughter needs it for an emergency operation or whatever. And the fraudster actually doesn't see the credentials. He makes the consumer enter the secure data on his online banking. Is that roughly right?
That's right. That's right. And that leads to the fact that the authorization is in fact given by the consumer, but such authorization is given fraudulently. So the bank couldn't come to the customer and say, hey, you have authorized the transaction, you have no right to refund. This is the actual situation under PSD2, but this point will change under PSD3, because now the customer can say to the bank, yes, it's right, I have given the authorization, but I was tricked into it, so you have to refund me the transaction amount, and that's the big change.
Okay, so fantastic. So that is really the APP fraud scenario as we know it from other regions such as the UK. I mean, looking at it just from the other side, I mean, it all sounds great. You get more consumer protection, and those who can actually analyze the data, like the banks and the social media and the telcos, they are made liable now. But what happens about if a consumer, for example, invests in some crypto and loses all his money, and then afterwards says, oh, I was forced into this, some scammer called me and told me to do it? What does the bank do then?
This approach is limited to payment transactions. So if the customer say this is a payment transaction which was initiated by the fraud of the fraudster, then the customer can claim the refund from the bank. But if the customer invests some money in crypto and says I was tricked into crypto, this is not in the scope of the consumer protection of PSD3. It's really concentrated on the initiation of payment transactions.
It looks like it's going to keep people like you, lawyers and courts and judges, very busy trying to keep that distinction clear, right? That this was something that was done by the consumer by himself, or that he was pretending to be forced into it. But a super exciting subject. Thank you for raising it, Peter. That was really insightful. Thank you very much for taking the time to explain this to us. And thank you to everybody watching this channel. I hope you enjoyed that. And please come again and watch other episodes here. Thank you very much.